We are in the market zone here on Closing Bell. Hightower Stephanie Link and CNBC senior markets commentator Mike Santoli here to break down these crucial moments of the trading day. It's great to have you both with us. Steph, go to you first. 963 is the decline as we speak on the Dow, but it's pretty broad-based.
Very broad-based, but remember, we're still up 23% year-to-date, so we have had a great year. But this was not the meeting that we wanted. This Fed, I mean, it was a hawkish cut. Not only that, but they said it was a close call. We all expected 25 basis points, but the close call, you mentioned there were four that did not want to cut, that don't vote, but they didn't want to cut. One dissent. That's number one. Number two, I mean, 4 cuts to 2, I think was kind of expected. Some thought maybe 3, but then again, he talked about, well, the reason we're not cutting as aggressively is because inflation is too high. Well, then that begs the question, why are they cutting to begin with? And I thought he was very confusing in terms of the labor market. He went back and forth. Is it hot? Is it cold? I don't know. So the point being is, why did they cut today? And are we now going to have to think about next year them not cutting at all? And that's what the market is digesting.
I mean, he was explicit, Mike, really, in saying that he doesn't see a hike as one of the, possible outcomes. But the point was made today, you just don't really know. And they don't really know. They just don't know what inflation's going to do. It's been stubborn, slightly stubborn, I think is how he characterized it.
Well, you never know. And he always tries to wave you away from the summary of economic projections. But the reality is there's a lot of dissonance in there. All right, as Steph was saying. So they're saying year-end PCE only gets down to 2.5%, and yet somehow there's 2 cuts in there, and yet 4 people said don't cut today, even before we get down to 2.5. And so naturally, as you get toward neutral and you start to have both mandates kind of almost have this interplay where it seems like they're working against each other, then the market has to throw up its hands. Now, the market was also in a very brittle spot.
That's right.
Super narrow. The NASDAQ 100 is getting crushed right here. Tesla down 7% after being up a few percent. So all that mechanical stuff looks very short term like a systematic sell down, a liquidation, because you had the VIX jump to 24. I said earlier, very wrongly, that the VIX at 15 looked high based on the S&P being so static for a month. And that's clearly the case, that too many people thought this might be a clearing event and we get a catch up by the average stock. We're getting a catch down by the mega caps. All the round numbers are gone. 6,000 S&P, 45,000 Dow, 20,000 composite. So we're going to reset. We're at the 50-day moving average in the S&P. So technically speaking, this could be your flush. This could be where you finally have people, kind of lose a little bit of their hope for the short term. Not that much has changed. I think the big problem here, though, is if rates are going to be around this area, you're just not going to clear the housing market. Okay, mortgage rates are above 7% again.
Which the Fed chair himself called weak.
Exactly. And so I think no more cuts is perfectly fine if everybody had maximum confidence of the durability of the economic growth trajectory.
But you're still at about 3% GDP growth without housing. That's number one.
Yeah.
But I think so I think the consumer is still in fine shape, and that's the bulk of the economy. That's what we care about.
Well, he used the word resilient.
It
when
is
he was
supportive
talking about consumer spending.
Because that's what the facts are. But on the other side, I'm a little disappointed the yield curve is flattening too, right? So that's starting to go against what I was thinking. We want a steeper yield curve for a lot of various different reasons, and that's not happening.
But it is bear steeping, meaning the short-term yields are going up a lot because you're just taking cuts away.
Right.
One of the issues, mentioned it, Mike, about some of these stocks that have gone up a lot. Broadcom is down 7% now, up 25% since Friday.
Ridiculous.
Some of it got a little bit asymmetric to the upside when you look at what the fundamentals were, and that's a good case study to look at. You own that stock.
Oh, my gosh. I mean, it was ridiculous. It was up 41% in 3 days, and it was a fine quarter. Guidance was better than expected. It has lagged NVIDIA, so I think you had some selling NVIDIA, buying Broadcom. It's a great story long term, but my goodness, no way to deserve to be up that much.